All right, welcome. You're watching this on Sunday night. I'm putting this together on Friday afternoon. I want to go through some of the indices here to see where we're at overall in the market. So we're going to look at these markets, right? We're going to look at gold. We're going to look at gold. We're going to look at interest rate futures, which are the bonds. We're going to look at crude oil. And we're going to look at the E-minis, Dow, NASDAQ, and Russell, just to see kind of where we're at, right, on a bigger time frame. So this is a daily chart of the E-mini futures contract. And as you can see, the all-time high was just made a few days ago, right in here. And this is where we're sitting. So we pull back, and we're bouncing. So I will, in fact, take a look at these levels, right? If the market continue rallying, if we get a test of that high, I'll be seriously contemplating buying put options for some type of reaction back down for some profit taking in the early part of January. We'll see. Okay, so again, keep an eye. So the E-minis, this is what it looks like. Let's jump right down to the Dow. It looks just like very similar, right, to the E-minis, right? So no big discrepancy here between the E-mini futures and the Dow futures, right? Got that pullback. Let's take a look now at the Russell, the small caps. Now, of course, the small caps got a bigger reaction down off the high than we did in the E-minis and or the Dow, right? You can see that was a much larger move in comparison to the E-minis, right? You can see that. And the Dow, right? Small. Let's look at the NASDAQ. NASDAQ, again, a little bigger than the Dow and the E-minis, right? And again, in all four of these markets, I will be looking to see if we can, in fact, come up and retest. If we can't and we fail right in here, I may be buying some put options for some type of reaction to the downside, okay? Let's look at crude oil. Crude oil, as you know, has been trending higher for, since what? Since June of this year. We've been just making higher highs, higher lows. Finally crossed through the 200 moving average. And then the 21 and the 10 also crossed up right here. We've been up, so we're getting higher highs. So let's just go back a little further to see where we're at in crude. So again, if the market can come back up and test the 59 area, 59, 60 area, I'd be looking to go short, possibly puts, buying some puts in there. But I will alert you to anything that I see as it arises. Take a look at the interest rate futures. Again, this is the futures continuous. So we just had a classic double bottom down in here back in earlier this year, right? December of 16, we put in this low, tested it. This is just a classic double bottom. Right here on March 14th, we had that retest. And we've removed quite a bit up. So we're in a little range right here. Not looking to do much in there. I need to see it more at extremes. When I say extremes, I'm talking about, that would be an extreme this high here, or if the market came back down and tested these lows right in here. But we're in the range. And then, of course, gold. I like gold. And actually, let's look for a potential setup for tomorrow, Monday. The 11th, right? So we're gonna have an inside day. We had an inside day on Friday, so we're looking for the market to break up through the high to initiate a long trade. If it breaks down through the low, I'm not looking to go short. Only if we trade up through the high, which is 118.92. So I need to see a break, a print up through 119, the round number, a minimum of 119.01. To look to go long, I'd be buying call options. I would actually extend that out now to the February expiration. I'd go February now. Because again, we like to see 45 days out. So 45 days out would surpass that January 19th expiration. I go to February. Okay? So that's gold. So that's why I've got it up in here. Okay? CMC, we were looking for a potential buying opportunity if we were able to take out the high of Thursday. As you can see, market was not able to do that, right? We've actually made a lower low, right, and a lower low rather, and a lower high. We've got a nice reading down in here, pretty much oversold. I'd still be looking at this. If on Monday, the 11th, we can break down into this zone right in here, this red zone that I am circling, I'd be looking to be a buyer. Okay, so that's a potential opportunity. And let's take a look at one more. Okay, one more, Yelp. Okay, again, I just like this pattern. Take a look at the bottom of the screen here. Look at the 2-bar RSI. We literally have been flatlining since, let's see, take a look at this. Since this day, we've been flatlining. Since that big down day, we've been actually oversold. Okay, on the 2-bar RSI, each day just flatlining. So I think we're pretty overextended, and I would be interested in picking this up. Again, either call options or the outright. It's really up to you. Again, the line in the sand would be below the 200 at 37 or at 40.5. If we were to get selling pressure on Monday, okay, if we are able to test Thursday's low of 40.05, maybe we break 40 and move lower, I'd be looking to buy, looking for a bounce to the upside. Okay, so those are my 3 potential trade setups for Monday the 11th, and hope you had a great weekend. I'll be back with you tomorrow. Bye.